So interest rates topped 7% last week in October. That's the highest mortgage rate since 2002 and the fastest hike that we've seen in history. So it's not only that rates are increasing, but also how fast this is happening. Berenice here with Coldwell Bank. And you know, none of us predicted this much of a hike. And as a real estate agent, I'm with buyers and sellers every single day. And as I listen to what they're saying, I notice there's major uncertainty in the real estate market today. Not only because of the rates increasing, but also because many are predicting an economic recession. No doubt that there has been a substantial shift in the market. So what are the correct actions to take in today's market? There's three key factors that all buyers and sellers should be monitoring closely right now. And number one is the number of closed sales. They are dropping significantly. In October, we saw 22% less closings than a year ago. Number two is inventories. Those continue to build up. They're now 15% higher than this same time last year. But we need to keep in perspective that they are still very low. Number of days on the market is the third important factor, and those continue to be between 55 and 60 days for a property to actually close. So what are all these indicators telling us? Well, because prices will always be dependent on the balance between supply and demand, we can be certain there's nothing pointing towards a market crash. Yes, market activity has slowed down big time. Many sellers prefer not to put their house on the market when they refinance somewhere close to 3%. And number two is important factor with sellers is the equity. Equity in properties is at a historically high level. We know prices went up just last year, a whole 24% last year. So equity is really high. So if you're a seller, you may have missed the very highest peak, but you would still be able to sell very well and cash out on substantial equity. It is still a good time to sell. And as a buyer, you now have more properties to choose from, less pressure, less bidding wars, and definitely you have more negotiating power. So as long as you can afford it, and as long as you plan to be on the property, say some 3 years, it definitely would make sense to start building your own equity. Let me know your thoughts. As always, reach out if you have any questions or comments. Thank you.